You're watching Silver News Daily. Subscribe for more.
Gold is apolitical. I think we definitely need gold, and I think the Trump administration and the rest of the world.
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell. Comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver shipped directly to you. So get in early, stay active. Gold just shattered $3,400, and yet silver still sits asleep at the wheel. But not for long, because something massive is building beneath the surface. Something so explosive, when it finally breaks, it could send silver rocketing to heights we've never seen before. The gold to silver ratio is now above 100, a level so rare it's only been touched during moments of complete monetary panic. The dollar? It's crumbling under political warfare and global distrust. And as the world scrambles for stability, silver is quietly being scooped up by those who know exactly what is coming. This isn't just another metals rally. This is a currency crisis unfolding in real time, and silver is about to become ground zero. So the only question that matters now, will you be positioned before the surge, or will you be watching it from the sidelines?
Yeah, the Dow-gold ratio, I think, yes, it could go to at least 1-to-1. If you look back at the early 30s and then 1980, we had the Dow-gold ratio go down to 2, roughly, in 1932 or 33. And then in 1980, it went 1-to-1. Gold was 850. The Dow was at 850. So we could even have that ratio going like less than 1, which would mean, for example, you could buy 1 Dow with half an ounce of gold. And yes, we reached like over 40 in late 1999, and it's never retouched or retouched that level. And recently, I noticed that it's broken down, and today especially, I think the handle is 11. For the last 5-6 years, it had been trading around 20. So I'm not saying it's going to go straight to 1 in the next few weeks or months. I think it will take a little longer, maybe a year or 2. But it's definitely broken down, and it proves that we're probably not really going to have what we saw. I think we already had the correction in gold. I think the event you talked about when the Dow, NASDAQ, and S&P dropped sharply, and then Trump reversed the reciprocal tariffs for 90 days. We saw that huge rally. So before that rally, gold had taken a hit, and silver, and they rebounded very quickly. I think this is it now, because as we speak here, I'll just have a look. You know, the Dow is down 980 points and gold is up 86. Even silver, which is being kept suppressed by the bullion banks, is up 10 cents. I mean, it was up a lot more earlier, but yeah, so
just play catch up, it detonates.
Yeah,
in 1991, when the ratio
that's the way I see it. The Dow-gold ratio, that's an important one as well. And it's not only me who sees that. It's like people like Pierre Lassonde. He thinks is going back to 1-to-1.
Triple the returns in a fraction of the time. And here we are once more, staring down a chart that almost no one seems to be taking seriously. Think about this. Gold has already surged past $3,100, and yet silver remains barely above $32. That's not just a gap. That's a distortion begging to snap. Every time this ratio has corrected back toward its long-term average of 60 or 70, silver has delivered life-changing gains. And this time, with inflation rising, central banks buying gold in record amounts, and currencies cracking under the weight of endless debt, that reversion might not just be inevitable, it might be violent.
Well, I mean, it's a combination of many things. I think ultimately it's just reflecting the currency debasement that we've had almost 25 years. I always remember the speech Ben Bernanke gave back in 2002, November 2002. It was the helicopter speech. At the time, he wasn't the chairman of the Federal Reserve, but he was being groomed to take over Alan Greenspan, and he said we're never going to allow deflation to happen again because we've got this technology called the printing press where we can just create dollars at no cost. And that Elijah, was what really woke me up to the fact that I needed to have silver and gold and silver, and keep adding on to it, and nothing's changed. The only thing that's happening now is that I think the world is waking up to it, especially sovereign nations and their central banks, and they've been buying real physical gold for the last 3-4 years, and it looks like even the United States might be repatriating all the gold that it's probably leased through the bullion banks. I mean, yesterday I think President Trump made a comment on Truth Social. He said that when you're negotiating, if you have gold, you can call the shots. So that's what I'm assuming. But does he know, though, that China probably has a lot more gold than the U.S., and that's if the U.S. has those 8,130 tons. And that's why I think the price is going higher. Some would call it, of course, the dollar going lower. And it's not just a dollar problem. It's a British pound problem, a euro problem. It's a problem for all fiat currencies. I spoke about this in my video today. You can't let the dollar index distract you, because ultimately all fiat currencies are going to sink to the bottom versus gold. So that's what I think is happening. I guess silver still has to catch up. It's quite frustrating that we're seeing silver not really go up a lot quicker, but I think we just need to have patience.
The dollar's in free fall, and it's not just about rate cuts or inflation anymore, it's about trust. When a currency starts losing faith at the institutional level, the fallout isn't gradual, it's seismic. And right now, we're watching that trust evaporate in real time. President Trump's latest threats against Jerome Powell have sparked fears of political interference at the very core of U.S. monetary policy. Combine that with surging trade tensions, a staggering debt load, and the dollar hitting 3-year lows, and you've got a recipe for a monetary meltdown. Every day the greenback weakens, silver gets stronger. It's a mirror image reaction. The less faith in fiat, the more demand for tangible assets. And silver, with its dual role as both industrial metal and monetary hedge, is uniquely positioned. While gold draws the headlines, silver quietly builds momentum beneath the surface. This is how silver always moves. Silent accumulation, then violent liftoff. And with global capital searching for safe havens in a world where traditional currency no longer feels safe, the next wave is already forming.
Definitely. Besant, he did an interview before the election, and it's on YouTube, and he told the guy who interviewed him that he sees Bretton Woods-like realignment. And notice how they focused, all the focus was on cryptocurrencies, Bitcoin reserves, or what gold, Bitcoin-backed dollar. They never mentioned gold. But what Trump said yesterday about needing gold to sit down at the table to negotiate and calling the shots, I think that's a huge signal that you and I value, but the general public has no clue what it means. And so, yeah, I think definitely gold will be part of a new monetary realignment. It always has been historically when systems collapse, especially fiat currency systems collapse. And I think that's why the world's been buying gold hand over fist for the last 3.5, 4 years. And that's why all the physical gold is going into the U.S. The people in the know, the elite, the top 0.1%, if you want to call them, they know what's coming. So and Trump knows that he needs the gold to sit down at the table with Xi, the Europeans, and also with the Russians. So, I do definitely see gold coming back, because having the dollar, the paper dollar, as the major reserve currency will only make the trade situation worse, because of Triffin's dilemma. And Triffin's dilemma says that if you have a fiat currency that's the major reserve currency, then all countries are going to try to earn that fiat currency. They're going to try to sell their goods and services to you, and that country will always have a current account in the trade deficit. But with gold is neutral, so gold is apolitical. So I think we definitely need gold, and I think the Trump administration and the rest of the world realize that.
Silver isn't just undervalued, it's running out. For 5 consecutive years, the world has consumed more silver than it has produced, and 2025 is shaping up to be the most dramatic shortfall yet. According to the Silver Institute, global supply is expected to reach 1.031 billion ounces, while demand could hit a staggering 1.148 billion. That's a deficit of 117 million ounces, and that gap isn't closing. Industrial demand is soaring, investor interest is spiking, and meanwhile, above-ground inventories are thinning out fast. This isn't just a bullish signal, it's a structural flaw in the market, the kind of flaw that doesn't correct quietly, and when it does correct, it tends to do so violently, with price spikes that catch everyone off guard. We've seen it before. Supply squeezes that lead to parabolic moves as investors and institutions scramble to get exposure to a metal that simply isn't available in the quantities needed. And unlike gold, silver's industrial utility means it can't just be hoarded. It's consumed, it's used. And once it's gone, it's gone.
Yeah, I guess in the short term, it does help gold go up versus the dollar. But if you look at the price of gold in euros and pounds and yen, that's still really high as well, and it's made a new all-time high versus the pound today. And if you look at the dollar index historically, it was an index created in 1973 to measure the dollar versus the major Western currencies, because up until 1973, Elijah, all currencies were had a fixed rate versus the dollar, and the dollar was fixed versus gold. But yeah, it started out at 100 in 1973, and we're around 98 right now, so it's lost 2% in 52 years. While gold, I think, was 85 when the dollar index started trading. So I think, yes, in the short term, it does impact gold. But I think overall, I think it's a huge distraction because it's measuring fiat currencies against each other. And we know, Elijah, that they all end up going to zero. And even if you look back at 2008, when the dollar index bottomed just above 70, gold was at 1,000. And here we are almost at 100, and gold is at 3,400. So yeah, that's how I see the dollar index. Yeah, definitely it could still go lower. One thing that might happen as well, because if you think about the system, the Bretton Woods system, that was kind of appended or kind of wrecked by President Nixon and his advisors in 1971. And then they started this dollar index at 100. So there's been a lot of talk of a monetary conference or coordinating the world monetary system, so they could actually negotiate while the dollar index is at 100, because that would be the same level that it was 52 years ago when the whole system imploded. Yeah, so they could use that as a, like, we're going to negotiate from here. And but we could go a lot lower. We could go a lot lower, but especially if the Fed starts cutting rates. So
the pressure on silver's industrial demand is reaching a boiling point, and it all starts with one name: Trump. His aggressive new tariff strategy has thrown a wrench into global trade, especially between the US and China. A blanket 10% tariff with targeted duties spiking up to 145% on Chinese imports has already started to ripple through industrial markets. Silver, heavily used in electronics, solar panels, and manufacturing, is feeling the heat. But here's the twist. What initially looked like a headwind might become the exact spark silver needs. Because while tariffs can dent short-term industrial usage, they also ignite financial fear. And in a world where fiat currencies are under siege, that fear drives a surge in store of value demand. In past trade crises, silver has responded not by declining, but by spiking, as capital fled to hard assets. This time, that flight is amplified by a global economy teetering on the edge, with both inflation and stagnation bearing down. And in that environment, silver doesn't just survive, it becomes essential.
well, he could definitely influence Powell, because if Powell doesn't want to leave, I think he's got till next year. But if Trump puts a lot of pressure on him, he could find some excuse by the next meeting, sometime in May, the next meeting, to cut. And that would shut Trump up, so to speak. You know, he would probably placate Trump. So, yeah. And the mainstream financial press, the mainstream economists, they think that pressuring Powell is like putting the independence of the Fed in jeopardy and its credibility. But personally, I think it's the same way you think. I don't think the Fed has any credibility, because the dollar's lost over 99% of its value since it was created in 1913. All the Fed really does is bail out big Wall Street banks when they need to be bailed out. And when these banks make huge profits, they keep their profits. The Fed is just there to make sure the top 1% keeps getting wealthier. So that's how I see it. But I'm not sure Trump wants to abolish the Fed, maybe like President Jackson did back in 1836 by not renewing the charter for the Second Bank of the United States. Maybe he just wants more control of the central bank. And
silver is approaching a breakout that could mark the beginning of its next super cycle.
I don't think he's going to tighten policy. So whatever happens, I think it's bullish for gold and hard assets.
This is the resistance line that traders and technical analysts have been watching like hawks. Why? Because a confirmed move above this level doesn't just signal strength, it opens the floodgates. The path beyond is clean, with little resistance standing between $33.11 and the next targets around $34.59 to $34.87. And the technical momentum is already building. Silver's been holding firm above key support levels, $32.19 and $32.35, bouncing off these zones with increasing volume, signaling accumulation, not distribution. The 50-day and 20-day exponential moving averages are converging beneath price, providing a springboard. And with the relative strength index tightening in a volatility squeeze, we're likely one catalyst away from a breakout. This isn't just chart watching, it's history repeating. In both 2011 and 2020, silver sat at similar inflection points before erupting into multi-month rallies. The setup today is eerily familiar, but with even stronger macro conditions. If the breakout happens, and all signs suggest it will, it could be the start of something historic.
Yeah, I think the only way the gold bull market could be reversed would be for central banks to act together and say one day all the central banks start raising rates aggressively, stop QE, and also governments getting together and saying we're not going to spend anymore, no deficit spending. But I can't see that happening. We saw the ECB cut rates last week. We're seeing President Trump criticizing the chairman of the Federal Reserve, calling him too late, Jerome, or whatever, that he needs to cut rates. We're seeing the markets discount several rate cuts already. So, yeah, I don't see any end in sight. And eventually, I think the public and investors are going to wake up and realize that there's no end to the inflation. And that's what Ludwig von Mises called the moment where the crack-up boom or the flight to hard assets or hyperinflation, that's when it starts. And when it starts, if you're not protected, if you haven't protected your assets with or your wealth with hard assets like gold, silver, it will be too late. So that's why I don't think it pays to be too cute wait for pullbacks right now in gold and silver. I would just say if you're fortunate enough to have spare fiat currency savings, and you're looking to buy gold and silver, do it. And I wouldn't sell my gold to buy silver. I would just buy both. Maybe if you favor silver, buy a bit more silver.
Fear is spreading, and silver is once again stepping into its ancient role, not just as a commodity, but as a lifeboat. Investors are watching the foundations of the financial world tremble, and the response has been swift. Capital is fleeing risk and hunting for safety. But this time, the usual safe havens aren't enough. Real estate is shaky, equities are volatile, and even bonds, once the pillar of safety, are under siege from inflation and central bank interference. In this vacuum, silver is being rediscovered, not just as a hedge, but as insurance. And it's not just retail investors. Institutions are sniffing the change in the air. With geopolitical uncertainty climbing, from Russia's skirmishes with Ukraine to the deepening rift between the U.S. and China, silver is being quietly accumulated as a geopolitical hedge, and sentiment is shifting fast. Once dismissed as a secondary play behind gold, silver is now being seen for what it truly is, the leverage play. The asset that moves harder, runs faster, and delivers when panic turns to action. As headlines grow darker and confidence in leadership erodes, silver is transforming, from a forgotten metal into a frontline defense. And the smart money? It's already moving in.
Yeah, I guess it depends like where you are and how the, let's say, the precious metals retail market is where you live. But I do expect pullbacks. Markets never go up in a straight line. But I think gold and silver and commodities in general, they're going to become more like the stock market has been for the last, 40 years. People always buy the dip. It's going to be the same thing for gold, silver, the miners. And yes, if you have the chance to add on to gold and silver, if we see a pullback, you should add on, but beware that they're going to be quick and sharp, these pullbacks, and your dealer might not even have a very good price. He might even have, or she might have a premium for you to pay. Yeah, and I mean, trading is different, of course, because some people leverage trading. I don't really recommend trading gold and silver because I think what it's reflecting is the system breaking down, the currency system breaking down, and the emotion that we have for gold right now might be a bit greed, but I think when fear kicks in as well, when people realize that their fiat currencies, be it the dollar, the pound, the euro, the Australian dollar, or whatever, when they realize that these currencies are becoming worth less and less, they're going to try to jump into gold. And I think right now it's still the wholesale market that's jumping into gold. Central banks and sovereign nations and big money is jumping into gold. I think the smart money.
All the pressure, all the signals, all the chaos, it's all converging now. The gold to silver ratio is screaming for a correction. The dollar is collapsing under the weight of political sabotage, and silver's physical supply is running dangerously low. Every technical level is being tested. Every historical pattern is flashing green, and institutional sentiment is shifting at a speed we haven't seen in over a decade. This isn't a market preparing for a move. It's a market already in motion. Silver has been suppressed, overlooked, and underestimated for far too long. But now, with gold already flying past $3,400 and the financial world grasping for stability, silver is positioned to deliver one of the most explosive rallies in modern history. The breakout is no longer a question of if, it's a question of how far, how fast, and how long it lasts. So if you're watching this and you've been waiting for the perfect entry, you may already be late. Stay ahead of the curve, subscribe to the channel for more insights like this, and remember, this is not financial advice. Always speak to a professional before making any investment decisions.
1970 and then the 80s, gold started out from 35. It went up to almost 900 in January of 1980. And then it never went back there again up until after the year 2000. And it was basically trading in a band like between 300 and 500, around 400. It was only in the mid-90s that it dropped below 300 and went to 250. So you could argue that de facto we had like a reset from like 35 to 350. So it's like 10 times. And then, yes, from 2001 or 2000 to 2011, we went from 250 to 1900. And then we saw it dropped quite a bit, back down to just above 1,000. And it's only recently that we've been able to break definitively above 1,900 and 2,000. And I think, yeah, we could definitely see like an 8-fold increase from 1,000, which would give us 8,000 or maybe even higher. And I think this time, because of the debt situation, the size of government, I'm not sure we're going to correct as much, and I think they might have to keep the price at that high level. It might never correct back as much as it did, let's say, from 1980 and from 2011. And I think the late Jim Sinclair always said that the next time we have a reset, it's going to stay up there because it's the only way to reliquify the system.